Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Stock indexes continue to rally. Our portfolio, DAX flies. Tip of the week, trend following on sugar futures. And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. One more bullish week for the stock indices, which managed to break the all-time highs. In this chart we see the mini S&P continuing its run. We see a bullish acceleration over the last week. The same also applies to the European stock exchanges. Let's take a look at the DAX, which is actually at very important price levels. A little behind is the Nasdaq, which has managed to recover a lot. It has made a good climb this week, but has not yet reached the recent all-time highs. As for the bonds, we see a fairly flat week. Fortunately, the downtrend of the previous months has stopped. While all the energy futures are negative, in particular we see gasoline, natural gas and crude oil with negative returns over 3%. Metals, on the other hand, are all positive, in particular copper with 2% return, and still positive the meat sector, with lean hogs continuing its uptrend. Soft commodities are positive. During the previous weeks they showed quite disappointing results. In particular we see sugar that has risen a lot in the last week, as well as coffee and cotton. Positive week also for cereals, which recovered from the previous week. Currencies show no particular movements. Maybe the EUR/FX is the only one that has moved. And also Bitcoin this week shows returns around parity. Clearly, with the stock indices rising, volatility usually declines. In this indicator we see the historical volatility, which is at very low percentile levels, both in the short term and in the long term. Let's take a look at the mini S&P. You can see how volatility has dropped over the past month. If we take a look at the Nasdaq, we can find a similar pattern as for the DAX, which is at the lowest levels of historical volatility. The same goes for implied volatility. The term structure is in full contango, very well defined, with the short-term volatility being lower than long-term volatility, while the VIX records values among the lowest in the last year. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two strategies on the DAX future. The first one is a reversal strategy, and the second one is a trend following strategy. And we can start from the reversal strategy, and we can see that during the Easter weekend the strategy took a very big trade for a value of 14,500 euros. And now it is in a long position again with a profit of around $500. We can have a look at the equity line, and we can see that is somehow wave-like. We have seen many drawdowns in the last trades, But with this last trade, the strategy managed to recover and to exit from this laterality period of the last 30-40 trades, reaching new equity peaks. We can also have a look at the annual period analysis, and we can see that also 2020, the last year, was pretty good for this strategy. Has managed to reach a profit of over 28,000 euros. And I want to emphasize the fact that in this strategy are already included commission costs and slippage. Also 2021 started well with a profit of over 17,000 euros. We can see that this strategy, as said, is a reversal strategy and try to enter when a fade breakout occurs. And we can see here that the market broke up the low of the day before, but recovered soon that level, confirming the fade breakout, and then bought back again at the low of yesterday, but this time bought from below. The strategy makes also short trades because DAX in certain moments is quite volatile, and so also the short side may help during out of sample periods. Now let's move to the next strategy that I want to show you, the trend following one. So it makes the contrary trades if compared to the previous strategy. So it will enter long when the market is growing, and on the contrary, it will enter short when the market is collapsing. This strategy has a main condition, a main filter, we can say. There is the ADX indicator, which measures the directionality of the market. And in particular, this strategy will look for those moments where the directionality, so the ADX, is quite low, and that's because, of course, when moments of no directionality happens, maybe after these moments the market will have a big directionality, and so a trend following strategy like this may work really well. The strategy is an intraday strategy, and also looking here at the annual period analysis, we can see that 2020 was also here pretty good with a profit of over $20,000, and also 2021 started really well with a profit of 5,000 euros. The equity curve is also here, has many drawdown, we can see them here, but every time these drawdown were recovered, and now the strategy is at its new equity peaks. So we can say that we managed to exploit the new all-time high of these futures. And I also want to suggest to use this underlying in every way. So also with trend following strategies, bias strategies, and of course also reversal strategies. I also want to remind that from 19 of April, Eurex Exchange will launch Micro DAX with a big point value of just €1, so that also less capitalized traders may trade this market.
Hi everyone, and welcome from Andrea Unger. Today we will have a look to the Sugar number 11 futures. That is a product listed on the Intercontinental Exchange, so the ICE exchange. And in particular, we are talking about the ICE Futures Exchange, so the American branch of the ICE exchange in general. Okay, so first of all, here the contract size is equal to 112,000 pounds, and the price quotation is on the cents of the pound, and this means that the multiplier, so the big point value of this product, is equal to $1,120 per point. So this is the multiplier that will determine the value of the transaction when you will negotiate this kind of product. And the minimum price fluctuation is 1 cent of point, and this value is equivalent to $11.20 per contract. And if we want to talk about the sessions too, of course, in this case, it's better to have a look from the having a look to the New York exchange, because we are talking about the American branch of the ICE exchange. So usually the data feeds are referring to the American time, so the New York time in this case. And the session goes from Monday to Friday from 3:30 a.m. up to 1 p.m. So now we will go to multi-charts, and in this case I've used the same trigger I've used in the previous episode on the coffee future, and in this case then I have created a sort of indicator where I calculated two levels. The first one is the long level that is calculated as the highest level between in a certain number of session, and vice versa for what regards the short side. I calculated the short level as the lowest level, so the lowest low within a certain number of session. So in this case I have optimized this number of sessions to determine which was the good number to take into account, and I then decided to take 10 as a number of sessions, just because in my opinion it's a quite stable value, and the results were good as well, are good as well. And in fact here we have nice average trade, a good average trade, and one of the best net profits in general with this input value. But we don't have an exceptional drawdown, to be honest. But it is not important because it's just the initial trigger. So you should work on this kind of idea then to improve the results, and if it's possible also to reduce the drawdown of the strategy. So now we will go to the detailed report, and as we can see, the equity shape is quite nice. Of course, as usual, it has had some difficult and bad periods, like in this case here, and also here, but it has always also had some extremely good periods, like this one in a cross between 2010 and 2011, and then in the future it seems quite consistent in general. If we go on the total trade analysis, we can see a quite nice average trade, as we said previously, because it's 350. And if we remember that the tick size was is $11.20, it means that the average trade is between 30 and 35 ticks. That is a good value in my opinion, at least in this case. But of course we have to remember the equity shape, so most probably the average trade is concentrated in the good periods like this one. And if we go to the annual period analysis, we can see that there isn't a particular consistency. I mean, there is usually a consistency, but there are also 3 negative years, one odd year here, and in general there are some exceptional years and some not exceptional years like in those cases. So the profits are mainly concentrated in 2 years, and this may be dangerous from some points of view. But as said previously, this is a particular market, and this is just a trigger idea. So you may try, of course, to improve the stability and the consistency of this kind of strategy, improving it.
Next week rollovers. We have the settlement date for the Linux future, but we are already trading on June contract, and the same goes for live cattle. As for the energy sector, the first settlement date is for crude oil on April 20th, but usually it's rolled a few days in advance, so at the end of the next week. Then will follow gasoline, natural gas and heating oil. I hope you enjoyed this video, and if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.